Hey, TikTok, Jim Malone here at Dallas Trading Floor. It is Thursday, and the stock market is kind of going sideways, but some of the stocks are doing quite well, like Tesla and Apple seems to be doing very well too. So hopefully you got in on the action trade alerts. It's very, very easy for everyone to get the action trade alerts. It's free and it's easy to sign up. All you have to do if you're on TikTok is go to my profile, click the link, and you'll be taken directly to the sign up page, and just sign up, and you will be getting the action trade alerts as they come out. I issue typically 2 to 3 a week, and the last one was a great one. It was regarding Tesla and how to trade it with the stock splits coming up. For everyone else, I am on Facebook Live. I'm on YouTube at youtube.com/Dallas Trading Floor. I'm also on Periscope at pscp.tv/Dallas Trading Floor. And I'm on Twitch at Twitch TV / Dallas Trading Floor. So let's get into it. Basically, we are still in a confirmed uptrend. And that's a good thing because the market seems to be moving up still. And I do think that it's a really good time. It's still a good time to get in. Even if you're a little bit late on a lot of these things, it's still a good time to get in. But always remember, as the thing gets more extended, we have to be careful because we're going to have some pullbacks. We don't have any pullbacks yet, but currently, right now, we are in a uptrend. So the thing is that look for the stocks that are moving the highest, and that typically right now is the QQQ. The stocks in the NASDAQ 100 tend to be doing quite well. So this is going to be very interesting. As Apple splits, and Apple is going to be splitting 4-for-1, this could be the world's first $2 trillion valuation company, which I think is just unbelievably unbelievable. But this is a historic thing. So you're still not too late to get in on this. I predict that based on my research, and again, I put this out on the action trade alerts, which you can easily sign up for by going to dallastradingfloor.com and signing up, or ask a question, or possibly get on my special portfolio list of small stocks. I sold a stock today, and I also bought one. I bought one share of Tesla for this. It's up, doing quite well. And I will also probably show you that live as well on the show today. But if you want to get the free action trade alerts, it's super easy. Just go to dallastradingfloor.com. And if you're on TikTok, looking at me on TikTok, just go to the link and click the link, and you'll be taken directly over to the action trade alerts for TikTok. So here we go. The spider is a little bit down. So interestingly enough, we seem to see, everybody keeps talking value. But interestingly enough, the king of value, Warren Buffett, basically sold his airline stocks, and he is now, Berkshire Hathaway anyways, is the single largest owner of Apple stock in the world. Can you believe that? So that is an interesting tidbit. Mr. Value has gone into for Mr. Growth. So, and by the way, my new moniker is Mr. 7%. So ask me about that in the comments, and I will tell you what that means. Well, what's happening is we are getting a melt up. So with this potential stock split, many shares are now going to be available to a lot of people that just were frozen out of the market because of the price of the stock. It was just too high. So we tend to see, once again, momentum in the NASDAQ 100 stocks. And that's basically the FANGs being, Apple, Amazon, Microsoft. Microsoft's part of the FANG, even though it's not in the name. Those kind of stocks. Facebook. I'm in all of these, most of these stocks. I'm not in Amazon. This is where the capital continues to go. So even though every few days they'll get on the air and say, well, tech investing is dead, and we're going to move to value investing. That just hasn't been the case. So when the market changes, believe me, I'll be the first to tell you. But remember, if you buy any stock, please be careful when you're going into the stock. Try to buy at buy points, and I'm going to try to give them to you. And also, when you do buy anything, make sure that you set a stop loss at 7% down from where you bought it. So if you buy a stock at $100, you want to set that good till cancel stop loss at $93. So that gives you that 7% cushion that you always want. You shouldn't take a loss any more than 7 or 8% at any time, just because you don't want to dissipate your capital. So even in a tremendous market like it is now, we want to be extremely careful and always set a stop loss. So the Qs are up. As I said, this has just been amazing. It's really been on a tear since it got above about 260. It's a 272 right now. It may be going as high, believe it or not, as 272. And if you can take a look at the trend line here, this is the 50-day moving average. It is definitely in the upward trend. By the way, when you're buying a stock, this is the first test. You want to look at the stock chart to see, is it going from the lower left-hand corner to the upper right-hand corner? That is a check market, and that makes it buyable. You don't want to buy stocks that are going in the opposite direction. So definitely looking at this chart, the QQQ, or the NASDAQ 100 that's represented by it, is in a very buyable state. So that's something that is important to look at. Also, the stock of the day today is Bristol Myers Squibb, and this is right below a buy point. So this is right below a buy point, and I believe it is probably going to break out from this base. This is a cup with handle base, and I want to show you the space, but the buy zone is basically 65.34 to 68.61. So it needs to get up a little bit more, just almost at the buy zone here, needs to crack 65.34 at good volume. It's still not there yet, but put this one on the watch list. It may break out soon. Let me show you the actual more detailed chart. It is a cup with handle. This is one of the best chart patterns that you can buy off of. So just FYI, Bristol Myers Squibb is right below a buy point. That buy point is that buy point. Let me pull that back. There we go. That buy point is 65.34, and the buy zone is 65.34 to 68.61. Now, if you want to see this in review, just all my shows are recorded on YouTube, youtube.com/Dallas Trading Floor, and that is you can definitely look back and if you need to review it later. And also with the action trade alerts, I definitely have that out there as well. So everything I have is archived on YouTube, and I'll show you this is the URL, youtube.com/Dallas Trading Floor. And by the way, this is episode number 109. So just put in on the search bar, Dallas Trading Floor number 109. It'll take you right to this episode so that you can see where that Bristol Myers Squibb buy zone is from the breakout. So the buy zone is 65.34 to 68.61. And I'll just show you once again. There you are. Okay, that goes that. So let's see if we have any questions. Hey, all right. Hey, where are you going? Hey, Jim, what time are you going live? Well, I typically go live, and you're probably seeing it right now. I was a little bit late. I was about 2 or 3 minutes late today. I was getting everything ready and to go. I typically go live at 2:30 to 3:30 every market day. And that's Central Time because I'm here in Dallas, and that is Central. So here we go. Oh, hey, great question. Nike did not take off. Well, probably part of the reason Nike didn't take off is because this is the old adage. This is why you want to be very careful when you buy right before earnings. You think, wow, the earnings are going to be great. It's going to go up a tremendous amount. But it doesn't sometimes. And why is that? Well, sometimes what happens is it's a whole buy on rumor, sell on news. Now the chart I'm showing here, it is a little bit up. So 106. So that's about $1.06. So let's take a quick look at that chart here, so we can see it. Yeah, I mean it did move up. It's got good it's really pretty average volume. So I don't think the earnings really made a whole lot of difference with MEG. That's typically what will happen. This is why you want to be very careful buying into earnings. You want to kind of wait until you go through earnings to buy to see how the stock reacts. Typically, even the very best stocks sometimes will dive when they go through earnings. It's just one of those things that happens. And so that's one of the reasons I don't recommend buying into earnings. Wait till the day afterwards. Now, also, another thing is if you've seen a big run up in a stock, you've in it right, it moves up very nicely. I recommend selling on the day before earnings. And this is exactly what I am recommending possibly doing with Tesla and Apple. At least sell a part of your position, because more than likely, based on the way it works, generally speaking, when it comes through a big event, it typically will drop. And that's true with definitely earnings. And sometimes it's also true, most of the time it's true, when there's a stock split. The day after the stock split, typically, the stock will move down. Also, when you are going into earnings, it's a good idea sometimes to get the maximum profit to sell it before it comes to earnings. Now, there's an alternative to that, and this is what I employ all the time, is I actually don't sell it and I hold it through earnings, but the way I hold it through earnings is I take my stop loss and I push it way, way, way up until it's about 2% or less below the closing price on the day before. And that way, if it decides to go higher, I'm still in the stock. If it decides to go lower and it reverses, I'm sold out at the highest price. So that's a way you could use the stop loss through earnings, and sometimes capture some of that upward momentum, because typically an earnings event will move the stock either way, but typically it'll move it down, even though you think, wow, the stock has great earnings. You would think the stock was going up, but if you think about it logically, that that price is with that all baked in. So the consensus is, that's the reason why it runs up typically. The consensus is that it's going to be a good number going into the earnings. And if it is, then it drops because people sell on the news. So remember, buy on rumor, sell on news. Okay, do you think Tesla and Apple will go down in the next few days? In a word, they're going to move around, but actually, in my studies, the way I showed it, and this is in the action trade alert, basically what's going to happen is the high for both stocks probably will be the day before the split, and that's August 28th. So if you're waiting to get into the stock, you might be waiting a long time, because I do think we may see a little bit of more movement upwards. I bought for my low-cost portfolio, believe it or not, this morning I bought on open. I only bought one share because I don't have a lot of value in that portfolio. But by the way, that is available if you go to www.Dallas Trading Floor and just sign up for access, and I'll send you the link for my online small trading portfolio of low-price stocks. Now, I did kind of break a rule here, because I did buy one share of Tesla, and of course it went up. So I do think going into the split, we're going to see it go up. Now, after the split, we're going to see it back off a little bit. The split shares are going to be back off a little bit. That's really what I think is going to happen. And that's based on looking at a lot of charts for a lot of splits. That's typically how they run. So here we go. What are your thoughts on Tesla's high PE ratio? Well, here's the thing. I can tell that you have probably taken an economics course, which is a good thing. I took economics courses in college, but they tend to emphasize what they call value investing. And what that is, they look at the price to earnings ratio. You say, well, if it's a high price to earnings ratio, it's not a good stock. Just forget about this. This is a very inefficient way to choose stocks. As a matter of fact, you can end up choosing a lot of bad stocks doing this. You want a stock that actually has a high PE ratio. Not all high PE ratio stocks are good, but typically stocks, the stock market is a 18-month a 6 to 18 month forward-looking indicator. So what is a high PE ratio saying? Well, if the stock is still selling, a high PE ratio is saying that a lot of people believe the position of the company is going to get a lot better, and that's definitely the case with Tesla, because people are saying, well, electric vehicles are coming and Tesla's number one, and it looks like we're going to be in that. So remember, Amazon had a negative PE ratio for like 10 or 15 years. Well, yeah, about almost 12, 13 years. And yet it's one of the most valuable stocks out there. I think it's trading for about 3,000 right now, in that range, maybe even higher than that. Hopefully it'll split. It really needs to. But what I'm saying is a low PE ratio does not make a good company. General Motors, which went bankrupt in June of 2009, which is one of the mightiest companies ever to grace the earth, had a tremendous price to earnings ratio right before they went bankrupt. So don't trust a price to earnings ratio. Now, I know that a lot of people, a lot of economists and a lot of people in school, that's what they look at. But unfortunately, traders don't look at that. Traders look at the motion of the stock. They look at the momentum coming into the stock. And that's what I look at. If you really want to get a good idea of this, I recommend possibly going to Half Price Books or some other store that you can pick this up at, maybe at used, the book, How to Make Money in Stocks, A Winning System, Good Times or Bad by William O'Neill. This book lays it out, and it's not very expensive. There are just millions of copies out there, and nobody reads it, but they should, because this is the system that you want to follow. It's a combination of both fundamental and technical analysis, but it also introduces a lot of people to technical analysis. Now, I'm personally a technical trader. I look at trends. I'm a trend follower, and that is how I trade stocks. And believe me, it's a lot more. I've done a lot better doing that than my friends that have read the Warren Buffett way and all that stuff. And that's great for Warren Buffett. He does well in that. I'm not knocking him, but he has an insurance company behind him, and he can wait 10 to 20 years. I can't. I want to. If I'm waiting 10 or 20 days, I'm getting antsy. So that's my take on it. So I just wanted to put that out there. All right. So for Tesla, what would be a good price range to buy it before it splits? Well, I bought it this morning right at about 16.16. I think it's beyond that now. So let's just check in here to see kind of how I bought that. I'm going to show you a screenshot of my little portfolio that I have online, and this just updates all the time. So let me put that in here. Oh, that's okay. I have to put it in. So let's put that up. Oh, it would help if I spell it right. That always is good when I do that. All right, here we go. Great. And I'm going to put my little portfolio in here. And it should come up here in just a sec. Super. I'm going to show you on the screen. And you'll see it filling in. Now, I did sell some positions today. So that gives you an idea of kind of where I'm at. This morning, right when it opened, I bought one share of Tesla for $1,613. It's currently trading at $1,625. So it's off a little bit, but you can see it's up just about 1%. I still think Tesla is going to move very nicely up until it splits. I think that it'll reach its height probably on August 27th. And I think that range is going to be maybe up as high, potentially, as 1770. And I'm going to show you the reason I think that, because, it's just one thing to pull something out of the air, and it's another thing to try to back it up with some facts. So here we go. I'm going to show you a professional chart of Tesla to see kind of where I think it might trade in the next few days as it's coming closer to the split date. Now, remember, with Tesla, you have to be a holder of record on the 24th of August. With Apple, it's the 21st. So here we go. I'm going to show you. Let's look at the daily chart. I'm going to pull that up here. There we go. There's the daily chart. And here's why I think it's possibly going to go as high as 1750 or maybe even 1800. Do you see this spike here? The all-time high for Apple for my Tesla, excuse me, is 1794.99. So I do believe we're going to exceed that. As you can see, we've gapped up 2 days in a row on very heavy volume. Now, why do I say that? Because when it hit its peak, 1794, you can see this red volume bar. Now it hit a all-time, not an all-time, but a very unusual spike. But it got up to that. There was massive selling at this level. So I do believe that this is the level that it's going to have to clear. And I do believe it's going to come right up to it, and it may break through it, but again, it may not break through it. So I'm very confident that we will see Tesla move up to about this 1800 level. Now it is the 1800 level exactly is psychological. So I do believe it's going to be a little bit lower than that. And that's based on this chart here. So that's kind of my thinking in terms of that, and that's sort of how I'm looking at it as a way to buy it. So I do believe that there's still got a little bit more to go. And oh, hey, sorry about that. I should give you, I am still having technical problems. I will, after the show, I will try to get you a link directly and send that out to you. I'm still having troubles with the email automation, so bear with me. I apologize for that. I will show you just for fun. I'm going to show you what I have on the screen, how it looks on the screen. So here we go. This is my list of small stocks. As you'll notice, yesterday I sold Blink Charging. We did quite well on that. We made 75%, and I cut off here a little bit, but the amount of days, it was less than 30 days. It was about 25 days. That's pretty good. 75% and 25%, so that's pretty good. I also sold Sorrento Therapeutics, not quite as many days in there. And again, I've got to get this sized properly. I don't have it quite sized, so you can't see the number of days of hold. It says holding, and then it cuts off. But I sold that one as well. That was up 5%. And here's how I sell them. If I see something going up, I move my stop loss up, and then when it reverses, it sells out. And that way I capture the profit. Now, currently, I only have 2 items in I only have 2 items in the portfolio. One is 100 shares of PSF Web. I'm waiting for this to do something. It's off 2%, or about $21. And the stock that I bought just this morning, and that's Tesla. And I do think we're going to go higher on that. But I've set my stop losses initially, and then as they go up, if they go up, I'm going to move those stop losses up. And so when they reverse, you will see them make a profit. And that's one of the ways I trade a small portfolio. And you can do it. Anybody can do it. If I can do it, anyone can do it. If we get Tesla under 69, this is still a good bargain. Well, I think it's a great bargain, but I think you're going to be, here's the thing. I don't wait. I don't think in the next few days you're going to get, it might drop back below 1600 if you do buy it. But, I still think we're in a buy zone right now for Tesla. Just my humble opinion on that, and how it is trading. So let me see if I can find yesterday's slide to kind of show you how I think Tesla is going to be trading. Okay, let me bring that up. I'm getting better at this. Still not great at it, that's for sure. So while I'm getting up that, we'll take the next question. For Apple, what is a good price range to buy before it splits? Well, I'll try to cover that as well. But the first thing I'm going to do is, let's see if I can show you yesterday's slide set. Where is it? Where is it? Special edition. There we go. Okay, good. And should come up here in a second. And I'll just kind of show you the sort of how I believe, it's going to trade. Now, these slides are similar. Let me see if I can get it. right before. Okay. All right. So this is, let me just show you this really quickly. This is the question on Tesla. And I want to show you this chart because this kind of gives an idea of how I believe it will move. We've gone through stage one. One is the pre-announcement. That basically that basically has already happened. Now the announced date of Tesla, we've been through that too. So we're right at a stage where and this was Friday of last week. This is about, and so it moved up a little bit, and then it sort of went down, not as much, kind of sideways. And then starting about yesterday, it started to make its ascent. I believe Tesla is going to make its ascent from about yesterday through basically a day before, that's number 4 here, the day before it splits. And the day it's going to split is going to be the 28th. That's the date it's actually going to split. That's going to be a Friday, the 28th of August, and it will start trading with the new split shares on the 1st. So if you are a holder of Tesla up until the 24th, you're good to go, and you will get that dividend. So I do believe that's where we're going to see the highest level for Tesla in its trading. And then it's going to split, and then as it comes back down, it will then come back down, and then people will sell off the shares from the split, and then it will start its ascent again. And the same is true with Apple. Let's take a look quickly at Apple. I actually have a contract to sell half of my shares of Apple the day before it splits, and the reason is because I want to capture that profit. And let's see if I can bring up a chart for Apple. AAPL is the symbol, and let's see if we have a good look at that. So I'm going to look at the daily chart here, and I'm going to click over there, and we'll take a look at it quickly together on the chart. So here we go. Basically, it's trading at 460. I have a contract actually to sell half of my shares at 455. I sold a call option that expires on the 28th of August for 455. So I'm actually above that now. I've made all the money on that, and I'm going to keep half of my shares, actually a little bit more than half of my shares, through the trade. I don't necessarily see Apple going quite as high as Tesla based on the chart here. But if we look at the minute-to-minute chart, we can see we had a huge spike of buying right here at about 560 right here. So it's about 460. So I do think that we are starting to top out a little bit, but we may go even higher. I think based on what I'm looking at this chart and projecting it, we should go about as high as about 490. 490 to 495, but your guess is mine. This is based on just extrapolating the chart here. But just as we spoke a few minutes ago at the end of the close, I think we're at the close. Yeah, we're at the close. It saw a very spike up in terms of the number of buyers. So at the very end of the day today, very end of the trading day, there was a lot of buying pressure on Apple. This is the Apple 60-minute chart. Let's take a look at the 5-minute chart. This is a little, yeah, okay, so we backed off a tad. We had our high for today at 464. I do believe that based on this, we are probably going to see it recollect steam and possibly go as high as 490, and that would be more than likely on the 27th of August, the day before the split. That's what I think is going to happen. By the way, on Apple, you need to be a owner of record by the 21st of August in order to get the split. And it's a 4-for-1. So if you have 1 share, you get a stock dividend of 3 shares, making a total of 4 shares. And the day after the split, that is going to be September. That's going to be August 31st. That's the Monday. It will start trading as a split share. So let's say if it's at let's just say on the day of the split it's 400. On Monday the 31st, it's going to be trading each share at $100 as opposed to $400. So that's what happens. There's no money exchanges hands, but the number of shares increase, and it is divided by the number, and that's the day. That's how it will open on the 31st of August when it splits. This is Apple. So let's see. Isn't the U.S. dollar inflated in the second round? Absolutely, it is. I agree with you. Totally, it totally is. The U.S. dollar is totally inflated. I do agree with that. But you know what? Here's the issue. The issue is the U.S. dollar is inflated, but we're in a deflationary economy. Now, let me explain that. Doesn't make a lot of sense, does it? Most of the world does not sell things that people want to buy. I know this is coming as a shock to you, but most companies, Mexico is a little bit different because it's a little bit mixed, but Russia and the Middle East, they really don't sell any products that people buy except for crude oils and minerals and basically other commodities. Well, guess what? The price of those has been going down. So therefore, they need more dollars. Well, the problem is they need more dollars to pay their debts because they borrowed in dollars. And even though the interest rates have gone down significantly because of all of this, they still have to pay back in dollars, and they don't have enough dollars. So they're desperate to get dollars. So countries like Iran, countries like Russia, they're cutting the prices on oil to sell into a smaller market. And with Tesla, the future is not in those materials. So they're in a world of hurt. So basically, yes, it is true the U.S. has inflated its dollars. It has gone out and borrowed like a madman. But guess what? Everybody wants to pay back in dollars. So therefore, there's a tremendous demand for U.S. government obligations, which pay next to nothing, but they at least pay dollars. And this is the dilemma. We are essentially in a deflationary economy. Now, interestingly enough, and this is why I don't recommend holding physical gold. I don't know if you saw this, but gold and silver got whacked today. Why? Because we are actually in a deflationary market. Now, I do recommend the gold miners because people want to buy gold thinking there's going to be inflation, which there is not. Those are good investments, but the physical gold is not. We have a deflationary economy, and so even though the Federal Reserve is pumping like there is no tomorrow, they're borrowing it at basically zero interest rates. So we are expanding the money supply. So long story short is the stimulus is going somewhere, and guess where it's going? It's going into Tesla. It's going into Apple. It's going into the FANG stocks. It's going into the stocks in the QQQ. That's why I am investing in that, and I'm just moving along with that trend, just like everyone else. So can we take a look at Facebook? I am a holder of Facebook. I just bought a position in Facebook, and I'll definitely look at Facebook because I think it's a very interesting company. The thing about Facebook is, everybody said, with this whole thing with social media, that it's left for dead. Well, I tell you, really, what's happening. The real thing that's happening in the world, and I'm not a conspiracy theorist, so please don't look at it like that. We are in a situation where it's back off a little bit today. It's down significantly. It keeps hitting a buy zone, but I am very bullish on Facebook. Take a look. There is a profit taking zone right here. That's this green area, but we're down a bit today at about 261. But I see it moving higher. I really do. Yesterday there was a tremendous buying pressure for Facebook, and today it looks like there was some profit taking, but I think we're still back in the same old mode. Facebook had terrific numbers, and part of the problem is that we are seeing a change in the whole media landscape. The media landscape is moving away from the traditional broadcasters like ABC, NBC, CNN, those kind of people. It's moving to people like Facebook. And so the ad spend is moving to Google, it's moving to Facebook, it's moving away from Comcast and several of the other companies. So that's the reason why I think Facebook is really a very interesting company. And they're even though they've gotten into trouble, they've had to go up on Capitol Hill and testify and all that kind of stuff, they are still a force to be reckoned with. And that's why it's such a big deal with this TikTok thing. Why that's also such a big deal. But I think I am not bailing on Facebook looking at this chart. Facebook became viable basically back at the beginning of June when this 50-day moving average crossed the 200-day. That's what they call the golden cross. And the golden cross, and by the way, for everybody that's looking on TikTok, I'm actually showing this on actual charts, but they're only available on my simulcast, which is on YouTube at youtube.com/DallasTradingFloor, or also if you want to look at Periscope. Periscope is very good technically, and it's very easy to use, and you'll get right to it. It's Periscope, pscp.tv/Dallas Trading Floor, all one word, and you'll go right to the most current episode. That's a little bit of a problem with Facebook, but this is episode 109. So what I'm trying to say is that I still think that Facebook is really, really good. They had excellent numbers. They blew out their numbers. As a matter of fact, their earnings per share were up 96% over the last quarter. So that is terrific. It also is coming out of a cup formation, which is a very good cup formation. It's not as good as a cup and a handle. This is a second stage space, but it is still very, very viable. It's a little bit, I don't know if I probably should have bought it. I should have bought it right at the correct buy point, which was 224, which I didn't. I bought it a little bit extended, but I do think that it is still a very, very, very powerful stock. And I think it's well worth looking at because there's so much movement into the techs. Okay, so I've been neglecting, unfortunately, the people that have come in on TikTok. So I appreciate it. Thank you for liking my email notifications. I really appreciate it. By the way, if you want to sign up for the email notifications and you're on TikTok, very easy. All you do is you go to my profile, hit the link. It goes right to the sign up page. Just put the information in there and you'll be right on. It's totally free and cancel anytime you like it. It's all that kind of stuff. So that's pretty good. And if you're on the other platforms, just go to DallasTradingFloor.com and there you can sign up for the Action Trade Alerts or ask a question, or I just put up a new thing where you can get access directly to the new the new low cost portfolio. And if I just put this in last night, I don't know how it looks. I haven't really prototyped. I didn't try to look at the page that well, but it's in the lower right hand corner. So just go onto the home page, lower right hand corner, and it'll have a little thing in red. Just put your name and address in there, and you'll be put right on the list to get the link to view the low cost portfolio. So anybody that is interested in that, so that is a good thing too. All right, so let's see. Okay, so what happens if you buy Tesla after the 24th? You have to be owner of record by, I'm not exactly sure. I think what they do is they'll adjust it for splits, but you won't get the shares. You'll just get the money. That's typically how it works. If you are owner of records by the 24th of Tesla, you will actually, on the 31st, you will actually get the shares. But if you're after that, you will get a cash difference. So you'll get the difference between refunded back into your account. So you'll get the difference between the price going in. So let's say Tesla goes in being $1,500 a share, and then afterwards, when it splits 5 for 1, it will be split down to $300 a share. You will only have one share, but you will get a refund, an actual cash of basically $1,200 back. So you pay $1,500 for the stock. It splits. You keep one share, but you get the $1,300 back, and then you have to go out and buy it in the open market. Now, if you are an owner of record, you get the shares. So there you go. That's sort of how it works. Thanks. All right. What do you think about EasyJet? Oh boy, please. I know I sound like a broken record, and I don't want to offend anybody, But now is not the time to be buying any airline. Why? Because people just aren't traveling on airlines. There's all this capacity. There's a place in Arizona. I've been there many times. It's a wonderful place. It's called Marana, Arizona, and it's where they park all of the jets when they're not using them. 75% of the world's jets are not being used right now. They're parked in Arizona and other places to keep them rust-free, waiting. Do you know that Boeing now is starting to? Everybody's canceling orders at Boeing. This is why I think Boeing is a potential short, by the way. And I haven't really gone into that yet, but the orders are slowing down for jets. So to buy an airline now is not a very good idea. It just really isn't a very good idea. So what do I think about Boeing? What do I think about Boeing? It's possibly a short. And let me show you this because I think you really have to see it for a fact. So it's BA. It's this is the biggest exporter that U.S. has, and it's big in the components. So let me show you the chart for Boeing here. And I think this is very instructive of what not to buy. Do you notice how the 200-day moving average is moving down? It's true. It's traded up here a little bit. It's popped up above the 40-day moving average, and that's a good thing. You really don't want to own it if it drops below this line. And basically what happened is a few days ago it dropped below this line, and guess what? People sold. And it moved up and it firmed up a little bit and it came back up. And so people are bargain hunting. This is the fallacy of buying on the dips. Everybody on CNBC is going to tell you, "Oh yeah, it's a great company. Buy it on the dips." Sure, that's a good way not to have any money. Boeing, unfortunately, is not buyable. But basically, here's the thing that's happening to Boeing. Do you notice how there's this kind of looks like a head here and there's a shoulder here? Well, what's going to probably happen is you're going to see it go down, but then you're going to see it rally up, and that's a head and shoulders pattern. We're not there yet. But when that happens, you want to short it because that is a short signal. So am I bullish on Boeing? Not on your life. I am not. And I'm not bullish on the airlines either, or the cruise lines. I just don't think they're that good right now. I mean, they could get better later. Can you explain what credit and debit spreads are? Yes, absolutely. I sure can. It's very easy. Well, here's the thing. There's two ways you can speculate in the stock. You can buy the stock and let it go up. That's the way most people do it. That's the way I do it mostly. But sometimes you don't want to buy the stock because you think that an event is going to happen and you just want to synthetically speculate on the stock. And the way you do that is with spreads. I like to do it with spreads. You can do it with naked calls or naked puts, but I like spreads. Here's how a spread works. A call spread is two calls, a lower call and an upper call. You buy them and sell them simultaneously. So when on a bull call spread, you buy the underlying contract, say a 35 call that's expiring, let's say at the end of the month, or August 31st. Let's just say that, and then you simultaneously you sell a call that's up maybe $10 from that, or a 45 call. So you get a net debit for the bull call spread. And then what happens is as that trades closer and closer to the expiration date, and by these ways they're the same on the expiration date. And I'll try to have a video that shows you what this is. You define your risk, but if in a bull call spread, if the range of the stock stays within the range and closes above the lower strike price, you will make a profit on that. If it doesn't, if it goes below that, then both of the calls will expire and you will not make a profit. You will lose the money that you put up for the original call spread. That is a bull call spread, and that's used when you think that the stock is potentially going higher. But there's another thing called a bear call spread, and that's just the reverse of it. You're basically, instead of buying the lower strike price, you are selling the lower strike price and you're buying the higher strike price. And of course, your hope with this is that instead of the stock going up, it'll go down. And if it goes down, then both of them will expire. Both of the calls will expire worthless. And because of that, because you gained more money for the higher call, the higher one than the lower one, you will make money. So that's kind of in a nutshell. And I probably went into too much detail. I'm going to try to visually put this together for you, and it'll be a little bit easier to understand. But just understand that basically it's a way to participate in a stock that you either think is going to go up or going down over a period of time. So that's kind of in a nutshell what it is. Can you tell me the name of the book again and its author, the ones you recommend? Yes, I sure can. Let me see if I can show you on the screen exactly what I'm talking about. It's How to Make Money in Stocks by William O'Neill. And hopefully I'll pull this up. Oh, how to make money in this part. Okay, no. Does it show there? Okay, let's see. Oh, here we go. There we go. There we go. Let me show you this one. Hopefully you can see it. Let's see if it'll pull it up for me. Well, I'm going to show you this on the screen anyways, and I'm just going to point to the one I want you to take a look at. It's right here. It's How to Make Money in Stocks. It usually has an orange cover, and it's by William O'Neill. That's the thing. How to Make Money in Stocks: A Winning System, Good Times or Bad, and that's the one you want. That's the one you want here by William O'Neill. Make sure it's by William O'Neill. And then also these other two books are excellent as well. But the primary book that you want to take a look at is How to Make Money in Stocks: A Winning System, Good Times or Bad by William O'Neill. So there you go. Okay, so let's see if I have what fractional with fractional stocks. Okay, what do you think of Moderna? Well, I was recommending Moderna, and I think that they have a very interesting situation. I can't really. Let's just take a look at Moderna to see. No. See, it's MODA. I think it's this. Is that right? Moderna. Oh. Okay. Let's see if I can get it real quick here. Symbol here, Moderna, and everybody's excited about Moderna. And I'll have it up in just a second here. There we go. mRNA. I am sorry. I for some reason I was off on that. So let's look at how Moderna is trending. And I don't think this is the trend that you want to see. So let's look at Moderna. Let's look at the chart of Moderna. Okay. Yeah, initially it went up a lot, but we have a downward trending stock. Now it did move up here, but after hours it's moved below the 40-day moving average. This is not a buy, by the way. This is not a buy. If you're not in Moderna right now, it is not a good time to be in Moderna. The chart does not look like it is a winner. And so let me look at a little bit better chart here for MR. Let's see, for mRNA. It's the symbol mRNA. So let me give you a little bit better chart, a weekly chart for Moderna. So let's look at Moderna. Yeah, it moved up very, very nicely. There was a buy point. The buy point was at 86.82. It's below that. It is don't go into the stock. It is trending lower, and it looks like it may crash through the 40-day moving average. So right now, until it shows some strength, until it moves above, until it moves above 86.82, it is not a buy. Don't buy bargains. Remember, you don't want to buy a bargain stock. You want to buy a stock that everybody else wants. So you want to buy high and going higher. Moderna is definitely not a buy right at this time based on the chart action. And that's all I'm basing it on. I know that they're doing a lot of great things and a lot of people really like them, but based on the charts, it is not a buy right now. So, okay. Any thoughts on Moderna and Airbus, ABUS? I think Airbus is going to stink too, because I think all the manufacturers of aircraft are doing poorly. But let me tell you, I haven't looked at Airbus in a while. ABUS. It's aircraft. No, I apologize. I thought it was Airbus, but I got it right. Airbus Biopharma. Okay, this is a penny stock. Well, not really a penny stock, but it is. This is not a stock you probably want to be in. But let's kind of look at it. It spiked up. There was a spike up here on earnings. Now, this is the classic. This is a classic, what they call blow off top, and this is why you want to be extremely careful buying a stock right before earnings. As you can see, everybody got super duper excited. It blew off up to over $6, and then the next day, everybody kind of got that. I don't think I want this idea stock, and it went down. So this is a very good lesson in how not to buy a stock. And that is going into earnings, you want to sell the day or the day of or the day before earnings. And then wait to see what happens and then buy it on the other side. And definitely this, unfortunately, on the other side did not look good. Not a good buy. I'm sorry, but not a good buy. You don't want to buy stocks typically going into earnings. It's just a little bit too dangerous for that. Okay. Can you recommend any good ETFs out there? Well, the king of all ETFs, at least for the last few years, has been the QQQ. But there is another ETF that I think is pretty cool, and it's called the FFTY. And basically, it tracks the IBD 50. Now, I will show you this. It's not the greatest chart. There are better charts out there. It's a kind of an interesting one. I'll just show you that really quickly. Here you go. This is the FFTY, and it has two cups, and it is on the ascent right now. But I think better than that, and this is kind of a very vanilla way of doing it, but I still think the QQQ is probably the best one out there. And I'll show you the chart for the QQQ. Take a look at the chart for the QQQ. I think this is pretty excellent. Now, the problem with the QQQ right now is we're in a profit-taking zone. We are not in a buy zone, unfortunately. The last buy point on the Qs was basically at about 200. No, 195, excuse me. Unfortunately, it's selling for 272. So it's very far extended from the last buy point. The last actual buy point on the Qs was about, let's see, it was there it is. It was 194.85. So it's a little bit different. ETFs are a little bit different in the way that they trade relative to individual stocks. And so you don't have to be as careful about getting into the right buy point on an ETF as you do on an individual stock. But if I were just looking for one good overall ETF that has an excellent track record for years and years and is a good way to go, QQQ. That's how I would go on it. I would go with the Qs because I do think they're really good. And I do put sometimes my spare money when I am looking to invest. I will have it in the Qs, waiting. And then when I find something that's really cool, like a split on Tesla or Apple or something like that, then I will sell my Qs and I will buy the other stuff. So it's a good place to park money. And, it's pretty cool. Qualcomm. Really super duper stock. I think it's, what is it? QCOM? Is that the symbol for Qualcomm? I don't remember it. Let me see if I can just bring that up. QUALCOMM. The great thing about Qualcomm, of course, is that they make a lot. Some of the very important chipsets that are going into the the new Apple 5G phone, which is going to be tremendous, I believe. Yeah, it's QCOM. And I apologize not remembering that. I should remember that number. I should remember that because I've looked at it a bunch of times. But let's look at the chart for Qualcomm. So here we go with Qualcomm's chart, and it moved up very, very nicely today. It's in a sell zone. That's what this little green here is. It's moved up from this breakout on earnings. We had excellent earnings, and this did break out on earnings. Now, not all stocks die after earnings. There was a big surprise. There was good earnings, and it went through and it went up. This is why it's always a good idea when you're coming through earnings to wait until earnings, wait for it to earn, and then see how it's trading on the day after earnings. The first day it starts trading after, and usually earnings are on Thursday, so that's usually on a Friday morning. Wait until about 9:30 or so, because typically that's when you can see the direction. If the direction is up, like it is here, then sometimes it's a very, very good buy, and that's definitely been the case here. We're almost in a profit-taking zone. I do think we're going to back off a little bit from this 113.41 price, but that's my opinion on it. But excellent, excellent company. And by the way, I am currently in another 5G stock, Qorvo, and I probably will be selling out of that because I have exceeded my call on that I sold. I sold a covered call on that. I have the stock, and it has made its profit, so I probably will be, I'll probably be out of that one. Can you please explain a bit more when you say it's not in a buying zone? Very good question. I'm sorry to be so quick about this, but the way you read charts, and I will show you the one for Qualcomm, I'm going to move back to that, is basically the way stocks move. And they went back to 1880 to figure this out, is that they don't move up straight, and don't move up straight up and straight down. They move it there's kind of like an elevator. It goes to various floors, and then it kind of hangs around, and then it goes up onto the next floor, or it comes down. And basically you have what they call support and a resistance. And then, so basically what you want to do is you want to buy it as it's moving through the resistance. That's what this little dotted line here is. This is what they call a base pattern. This is a cup with handle. That is the form here. And this little line is the buy point. Now, when you get to a buy point, on this one, the buy point was 77.82. So when you reach that, you don't want to buy it until you actually get to the buy point. And then you want to buy it basically from the buy point up to 5%. So that's how it works. Now let me show you an actually concrete example of a stock which I put up here. And this I try to do this every day. I probably don't explain this well enough. This is an issue for me. I don't explain this well enough. That is very close to a buy point. It's just right below it, and it's ready to move above that buy point. And I want to show you this. This is Bristol Myers Squibb. That is the stock that is right at the buy point. So let me show you this one. And I do this on the show. I try to get one of these every day that's getting very close to where it's buying. The buy zone for Bristol Myers Squibb is 65.34 to 68.61. Now, how do I know that? Well, I know what the buy point is because I've analyzed the chart, and the buy point is 65.34. Now, currently, when this slide was taken, it was the stock was selling for 63.32. So this is on my watch list. I'm getting ready to buy this one. I'm not going to buy it until it has moved past 65.34, and I'm only going to buy it up to 68.61. And I'm only going to buy it. I'm only going to buy it as it shows strength in volume as it moves beyond. This is the volume line as it moves beyond the 50-day moving average, and that will give me more of a chance that it is going to move higher, and it's going to sit basically at that buy point. So that's what a buy point is, and I could go into it for hours, but for right now, that's kind of what it is. So I try to tell people on the show what the buy point is going to be, and then how they can take advantage of that. By buying at the buy point up to and through the buy zone. So it's the buy point plus 5%, or you find out what the buy point is, you multiply that times 1.5%. Now, you don't have to calculate it yourself. There are websites that actually calculate buy points, and one of the free ones that you can look at, and you kind of have to get familiar with this, and hopefully you'll take a look at this, is TradingView has this, and I believe StockCharts.com has this. I actually use professional software from the Investor Business Daily, which basically shows a lot of this as well. I can actually go through and look for it, but one of the great things about the software that I use is that it has an AI program that goes and looks for these exact formations and shows you kind of where it is. So that's what I'm trying to share with a lot of people here on Dallas Trading Floor. I went out in a long talk on that. So let's see. Green screen. Just green screen. Yeah, I am so sorry about this. On TikTok, unfortunately, I only have the green screen, and that's because of the way the way TikTok works. I cannot simulcast the charts. In order to see the charts, what you'll need to do is go over to YouTube or to Periscope. It's very easy to go to Periscope when I'm broadcasting. Just go to pscp.tv/Dallas Trading Floor, and you'll be able to see exactly the backgrounds that I'm projecting on the green screen behind me. I'm sorry that it does. They don't have this feature yet in TikTok. I'm hoping that they'll get this soon. So I apologize for not having that available. And by the way, I just want to take a quick break here to show you that if you do want to get on my action trade alerts, super duper easy. It's DallasTradingFloor.com. And just sign up there, and I have ask a question or possibly sign up for the action trade alerts. And then I also have the new thing, Jim's portfolio, that I show my low-cost portfolio, how I'm investing, if I've made money, if I've lost money, kind of what I'm doing, and that's available as well as on this too. So everybody, it's about an hour, and I apologize. I am out of time, it looks like. Where do you get those charts? Well, I have a charting service, and I use MarketSmith right now. It's one of the best chart services out there, but it's kind of expensive. It's professional grade software, but there's some other charting software out there that's super great. One of them is StockCharts.com. I think they have a free plan, and also TradingView.com, and I think they also have a free plan too. In order, unfortunately, to get the really good stuff, you do have to go a lot of times with the full on, but you can get an idea of pivots, which are buy points, pivots on TradingView. I'm sure of that. So, and they have a free plan as well. So that's a really, really cool thing. So everybody, I really appreciate you taking the time out of your schedule. Take a look at me. And we're going to be back tomorrow at 2:30 Central Time. And I will see you tomorrow. Happy trading. And in the meantime, sign up for the free trade alerts, DallasTradingFloor.com.